China is quietly doing something that should terrify global markets. While the world watches interest rates, elections, and stock indexes, China is dumping U.S. debt and aggressively securing physical silver. Not headlines, not theories. Confirmed positioning. This isn't diversification. This isn't coincidence. This is a strategic pivot away from paper promises and toward tangible control. Because when confidence breaks, debt becomes worthless, and metal becomes power. Today, we expose why China is exchanging U.S. Treasuries for silver, what they see coming next, and why this move could permanently reshape global markets. Welcome to Boring Silver Mystery, where quiet moves reveal loud futures. Today's story isn't about speculation, it's about strategy. A long-term chess move unfolding in slow motion, largely ignored by mainstream media. China's actions in the debt and silver markets tell a very different story than official statements. When you connect the dots, the picture becomes unsettling but clear. This video breaks it down into 10 chapters. Each one exposes a layer of China's strategy and why silver is at the center of it all. Stay focused, because this isn't just about silver, it's about who controls the future. For decades, China was one of the largest holders of U.S. Treasuries. That position offered stability. Why does this matter? Because U.S. Treasuries are built on trust and fiscal discipline, monetary stability, and geopolitical neutrality. China no longer believes that trust is justified. Debt can be frozen, sanctioned, weaponized. Silver cannot. By reducing treasury holdings, China lowers vulnerability to financial coercion while freeing capital for tangible assets. This is not panic selling. This is preparation. Gold always gets attention, but silver does the work. Silver is critical for energy infrastructure. Medical systems, China dominates global manufacturing. Without silver, production stops. Unlike gold, silver is both monetary and industrial. It's harder to replace and easier to disrupt. China understands that controlling silver supply means controlling future production capacity. Gold preserves wealth. Silver controls systems. Silver exists as something you must hold, transport, store, and protect. China is choosing physical certainty over financial abstraction. Paper assets depend on systems functioning. Physical assets matter when systems fail. In a world of rising geopolitical tension, fragile supply chains, and currency instability, physical silver offers sovereignty. That's why China isn't buying ETFs, they're securing real metal. The moment financial systems were used as weapons, the rules changed forever. Asset freezes, sanctions, and payment restrictions taught a powerful lesson. If you don't control the system, you don't own your assets. Reducing exposure to U.S. debt is about reducing exposure to U.S. control. Silver operates outside that framework. No counterparty risk, no permission required. Silver isn't rare but accessible, silver is. Grades are declining. At the same time, industrial demand is accelerating. China doesn't need all the silver. They just need enough to create scarcity. In markets, scarcity equals leverage. When supply tightens, price is no longer negotiable. U.S. debt is expanding exponentially. Silver supply is not. China sees a system where debt grows faster than real value creation. That imbalance always ends the same way: currency debasement. By exiting debt and entering metal, China is front-running that outcome. This isn't anti-America, it's anti-unsustainable math. China isn't betting on collapse tomorrow, they're preparing for transition. Trade settles in multiple currencies. Commodities regain monetary relevance. Silver fits perfectly into that future. Western markets rely on confidence. Confidence that debt will be honored. Confidence that paper equals value. China's actions undermine that confidence without saying a word. When the second largest economy stops believing in your debt, others eventually follow. That's how trust erodes slowly, then suddenly. For China, silver is insurance against currency shocks, energy transitions. Financial warfare insurance isn't exciting until you need it. China is building redundancy into its future. China isn't alone, they're just early. As more nations reassess risk, tangible assets gain priority. It only needs marginal reallocation to explode in price. And China is already ahead. China isn't trading U.S. debt for silver because they expect collapse tomorrow. They're doing it because they don't want to be trapped when confidence breaks. Debt depends on belief. Silver depends on reality. If you want to understand markets before headlines do, subscribe to Boring Silver Mystery. Like the video, share your thoughts below, and stay curious because the most important financial moves happen quietly. This is Boring Silver Mystery, where boring decisions shape the future.